The person in this video is not a paid actor, but an actual SunWest employee.
We are back with a new series of weekly market insight directly from the Capital Markets Trading Desk. You guessed it, right here at SunWest Mortgage Company. Thank you for joining us for the second edition of our newly launched Market Insight series. Tensions remained high and expectations from Feds moderated. All right, everyone, we have sailed through another volatile week as traders were majorly occupied with the soaring energy prices, the concerns of geopolitical risk as Russia's war on Ukraine entered the second week, and the Federal Reserve's outlook with interest rate hikes against the risk of persistent inflation. U.S. and European stocks were fluctuating between gains and losses. Crude prices surged past $110 a barrel as fighting raged in Ukraine for a ninth day, posing a challenge for central banks hoping to curb rising inflation. Gold prices slipped on improving sentiment, and U.S. Treasury yields rose from an 8-week lows as investors weighed how aggressively the Federal Reserve might raise interest rates in coming months, with the outlook on growth a major concern. So, I know you're asking, what else is steering the market? Russian forces fired missiles at Kyiv and bombarded cities across Ukraine as President Vladimir Putin pushed ahead with his invasion in disregard of a United Nations vote to immediately halt the fighting. Federal Reserve Chair Jerome Powell reaffirmed the U.S. Central Bank is on track to raise interest rates this month and commence a series of hikes to curb the highest inflation in decades. Powell said that the Russian attack was causing risks both to inflation via higher energy and commodity prices as well as to growth. President Joe Biden delivered an optimistic State of the Union speech on Tuesday evening, saying that America is stronger today than we were a year ago, even as war rages, the concerns about inflation linger domestically. The Fed's Beige Book, a compilation of anecdotal observations across the central bank's districts, revealed that inflation appears to be showing no signs of slowing down. U.S. Secretary of State Anthony Blinken is traveling to NATO member states neighboring Ukraine. The U.S. merchandise trade deficit unexpectedly widened to an all-time high from $100.5 billion in December to $107.6 billion last month in January, reflecting a record value of imports and a drop in shipments overseas. For January, residential spending posted another solid monthly gain, while non-residential outlays resumed their solid recovery from the second half of 2021 that stumbled in December. Total construction spending rose 1.3% to start 2022, handily outpacing the 0.1% expected gain. The U.S. and other countries in the International Energy Agency agreed on Tuesday to release 60 million barrels of oil from their emergency reserves to help with any supply shortfall caused by Russia's invasion of Ukraine. OPEC, made up of the Organization of the Petroleum Exporting Countries and its allies, including Russia, offered no surprises at its monthly meeting, quickly agreeing to boost production in April by another 400,000 barrels a day. Home buyers will now have the chance to lock in low interest rates just ahead of the most popular season to purchase a house. Mortgage rates saw a major drop this week. How much of a respite Americans will see from rising interest rates could depend on what the Federal Reserve decides later this month. War in Ukraine is likely to boost inflation in the short run, but how long the pressure will exist would be a question upcoming days would have to answer for us. Well, sorry to go, but that's all we have for this week, guys. Please join us again, everyone. We will keep you updated on the status of the Russian-Ukrainian war, figures on consumer credit, trade balance, month-over-month CPI, jobless claims, and so much more. So stay updated with our news, and our trading desk will keep you informed with pricing incentives. Happy Friday, everyone. Have a great weekend. Buffy, out.